Markets saw choppy price action overnight, signalling the end of the quarter. So what other market moves can we expect moving into the next year and beyond? Let's have a chat to David Scott from StoneX. Good to see you, my friend. How is the end of quarter volatility impacting global markets at the moment? Let's talk trends.
Great to be back as well. And look, last night, some pretty messy price action, it's got to be said. You can really tell that we're approaching the end of the first quarter. Saw stocks down. We saw that generally the US dollar was a touch softer. The Japanese yen was off, though, and some massive moves coming through in the commodity space. No real rhyme or reason, which tells you that maybe there's factors other than technicals and fundamentals driving the price action right now.
Okay, so why did copper prices drop so sharply, and what role did the absence of Trump tariff announcements play?
Yeah, copper's been a really interesting spot over not only the past week or so, but the past couple of months. Now, there's a lot of fears in the marketplace that we're going to go and see the Trump administration place 25% tariffs on imports into the United States. And what that's done is seen a mad scramble for all the supply around the world to get into the US. And now we've actually got it where it trades at a premium in US exchanges relative to other parts of the world. Now, what happened earlier this week is that all those tariff announcements came in, and then there was nothing specifically about copper. And then all of a sudden, that's gone and seen the price go and drop dramatically. And throwing a bit of technical indicators as well. And we're seeing quite a big violent pullback overnight, around about 2.5% or so.
David, let's keep it with the precious metals. And gold surged to record highs while silver hit its highest level since October. What factors are driving that rally?
Yeah, again, it's probably got something to do with what's going on at the time of the quarter as well. But also, there's a lot of concern out there. These are industrial metals as well. Obviously, I know probably silver more than gold, but we've also got concerns about potentially what could go down the path when it comes to these tariffs in the United States. I'll just remind our viewers out there that when it comes to silver production, the two largest producers globally are Mexico and China. And of course, they're at the crosshairs of the Trump administration's tariff policies right now. So maybe that has something to do with it as well.
Okay, so let's talk SPI futures. They're slightly down. Could we see a squeeze higher as election uncertainty sort of starts to clear?
Yeah, SPI futures, got dragged lower overnight by what we saw on Wall Street. All the major bourses over there finished down around about 0.5% or so. We're only down about 10 points. One thing I'm looking at, you mentioned the election, of course. We know now that the election date is going to be May the 3rd. And even though it gives us a 5-week campaign, we know that at some point in the near future, that uncertainty is going to be resolved. So combined with looking at what we're seeing at the moment, there is some buying coming in around about 7,980 in futures. Potentially on a Friday, we might go and see a little bit of a squeeze higher into the weekend.
All right, well, let's look at the Fed's preferred inflation measure for the core PCE deflator. It's expected at 0.3%, I understand, month on month. What impact could this have on the markets more broadly speaking?
Yeah, for those who are not aware, so this is the Fed's preferred underlying inflation measure, and the markets have become very good at actually predicting what it's likely to go and land at because we get a lot of inputs to this particular release earlier in the month. Today, I think the more important factor is going to be more so what we get information on spending and incomes data. If you talk about the United States, all the uncertainty and the concern out there right now is not so much about the inflationary impacts, but it's more so about what's happening to economic growth. So given the size of the US consumer in terms of the proportion of US economic growth, this spending figure in particular is going to be really important to go and provide sentiment when it comes to the outlook for the US economy.
Yeah, okay, well said. So why are consumer spending and income data considered more important indicators of US economic strength at the moment right now?
Well, the US consumer, give or take, depending how you measure it, is over 80% of the entire US economy. So if you see a slowdown in that area, you know that there's likely to be a slowdown in the broader economy. So to me, that's at the moment, there's a lot of uncertainty about what the tariff policy will go and mean when it comes to longer term inflation. But I think when you're talking about broader markets right now, it's really about the trajectory for growth. Is this tariff uncertainty likely to go and lead to a slowdown? Because if that is the case, then we're talking about weaker earnings. We're talking about probably further losses in equity markets and probably some weakness coming through in the US dollar as well.
David Scott, I want to thank you for joining us on the program. It's always a pleasure to speak to you and find out what on earth is going on out there in this wild world as we keep an eye on those charts as well.
Great to be back, and everyone have a great weekend.